We're joined live by BMO's senior economist, Robert Kavcic. Robert, thanks for joining us this afternoon. So here we are at our inflation at the highest rate in almost 40 years now. How precarious, how concerned are you about the situation for Canada's economy?
Oh, it's a major issue. There's no way around it. I mean, we're looking at multi-decade highs for inflation, and it's a unique situation in that there's not just one particular price issue out there. It's not an oil price issue or a food price issue. It's widespread inflation across the economy that tells us and that tells policymakers the economy has just been running too hot for too long. We have an inflation issue rooting in the psychology of Canadians and among businesses, and it's going to have to be dealt with. And it's going to have to be dealt with quickly. And arguably, I mean, policymakers are already pretty well behind the curve on this. And we'll hear from the Bank of Canada again next month. And I fully expect they're going to come out pretty hard in terms of interest rate hikes.
Right, Robert, you know, the Bank of Canada raised their interest rate by 125 basis points over the past 4 months. Another hike is expected. But all this talk of what the Bank of Canada is doing, the focus is also on the federal government. What can they do that won't put the economy into a recession?
Well, so the onus here really does fall on the Bank of Canada. And as you mentioned, we do expect they're going to raise rates by 75 basis points in July, plus a handful of hikes beyond that by the time we get to the end of this year. And that's really the mechanism by which we historically slow down inflation from an economic perspective through interest rates and through the demand side of the economy, which has been extremely strong. Look at housing as an example. For the federal government, it becomes a lot tougher, and that's where they probably have a little bit less of a role. In a sense, their role in getting inflation back in order is backing off a lot of what they've been doing through the pandemic. And we have to keep in mind that when you go out and transfer $250–300 billion from the federal level down to Canadian households, that's extremely inflationary, and one of the reasons why we have seen price pressures build in the first place. So. From that perspective, them standing down and removing a lot of the fiscal stimulus is really their role in this.
You talked about the psychology of this, Robert, in terms of, we've seen polls suggesting that, maybe around, 60% of Canadians believe we're heading for a recession. In your professional opinion as an economist, can we avoid a recession at this point?
Historically, it's tough when you have a shock like this over a very short period of time, be it oil prices and inflation and the type of monetary policy response that we're going to get in interest rates. It's really tough to sidestep it. Our view on this is that we're going to see economic growth really stall out through the latter stages of this year and the first half or so of next year. We're not forecasting a recession. We typically don't do that. But we're going to need a few things to go right. Like, for example, we're going to need some of the price pressure in oil or food or the goods side of the economy, for example, to back off enough to let central banks not have to raise rates as much as is priced into the market right now. And if something comes in and allows that to happen, then yeah, we can sidestep a recession. The flip side is that if we continue to see these very sticky price pressures and central banks have to raise rates as much as the market is expecting now, it's going to be a pretty big pill for the economy to swallow.
It sounds like a very difficult balancing act, Robert. Going back to what you said about the federal government, handing out those CERB checks to people during the pandemic and how that created this inflationary situation. A lot of people who received those CERB checks weren't working. So essentially that kind of cancels us out, right? They're still getting the amount of money they would have made or even less than if they were working. So would you say the fault really lies with, I guess, the majority of the wealthier population that were just saving up their money while supply was dwindling during the pandemic?
Yeah, no, it's a fair question. And don't get me wrong, I'm not trying to lay blame here as an analyst. I'm just looking at where the inflation pressure is coming from, right? And so to put it in context, the pandemic recession was the only recession in Canadian modern history where household disposable income actually rose, right? So on net, the federal government not only stepped in to fill the income hole that was created by the pandemic, but they layered a lot more on top of that as well. And that's not to their fault. Remember, in the early stages of the pandemic, we didn't know what was happening. And at that point, the speed of fiscal support was a lot more important than getting the actual level right. So they overshot a little bit. Monetary policy also overcooked the economy a little bit. And now we're on the other side of that, where we have to kind of pay back from an inflation perspective and tighter policy to offset that.
Okay, BMO senior economist Robert Kapsik, thanks for your time this afternoon. Really appreciate it.
Thanks, Robert.
Great. Thanks for having me.